go 2, 3, 4 levels deeper than the information that you find in the mass media. Have for yourself in the different asset classes a definition of success. If you're really an investor, you invest in something you believe in for a goal to achieve. And achieving that goal is the definition of your success. I want to have an investment on asset that has more than one way to make money for me. The only one that I found was real estate.
What's going on, everybody? Welcome back to the Money School podcast, where we talk about how you can take back control of your money by teaching you how to be your own bank. Today's episode is not so much going to be about how to be the bank. It's going to be how to prepare for a future that we can pretty much predict as of today. Where is the future going with technology? What is it going to mean if you're an investor in the stock market? What's it going to mean if you're an investor in real estate? How is the entire industry going to change because of what's happening with AI, quantum computing, and just the end of a cycle? That's exactly what we're going to get into: how to prepare, how to build the foundation, and the one thing we all know is every one of us have to have a place to live. Well, that's going to be my guest. Welcome to the show.
Hey, Chris. Yeah, thanks for having me, and nice to see you again.
You as well. Now, I know we did another podcast where I was on yours, and we talked a lot about similar things to what we're going to get into today. But I want to talk a lot about, the future world, because it's changing so fast. And I know that this is something that you talk about a lot, your company and everything you do. And just so everybody knows, if you want to look them up, it's Ideal Wealth Grower. So we'll give you more info on that, but this is what he talks about. But you got to have a strong foundation. I know offline we were talking a little bit about that, the foundation that somebody's going to build to be prepared for pretty much anything but what we think is going to be happening. And that is economic slowdowns, massive, technology that is disrupting just about every industry, from AI to, what we don't know, but is soon to be known, quantum computing, and just everything that goes along with that. So let's just dive right in. What do you see happening here in the next couple of years?
Well, one of the things just on a fundamental level is that humans, if you want to really go broad, have over thousands of years basically been conditioned to expect and operate in a linear world, right? 1 + 1 is 2 kind of thing. And what we're seeing in the recent developments with technology, especially in the area of AI, with computing, with energy, with a lot of things, is an exponential world. And so what that means is people are underestimating the amount or the amount of change, the speed of change. Right? I mean, just if you draw a few comparisons, when the smartphones came out, to double from one size community to the next and double again was initially between 12 to 18 months. And that was already considered crazy fast. And right now with ChatGPT, it's every 6 months. And they're already at like 125 million users a day. Right. And it's completely conceivable that they're going to have 250 million users probably next spring and 1 billion users and so forth, unless there are some, restrictions where, like, let's say China says, no, our people can't do Google, can't do ChatGPT or stuff. But if in an open free market, if it's accessible, this stuff is happening. And it's not just happening personal private users, it's also happening in corporate. Right. So what people thought to be normal, the work that they used to do, they're basically filling out the same spreadsheet every month, and they're making the same report every month and the same little graph about how the business has changed, will not be necessary anymore, because it's one click and it's made for the rest of the year, and it's basically instantaneously updated with every variable that comes in. And people will be like, oh, but what's happening with my work? Right? That's just one little example where, yes, we know there's change, but we're more conditioned to accept it to be linear and not exponential.
And I think we've seen that. I mean, I love how you use that example of the cell phone and the smartphone, but we're seeing it more and more, almost on a daily basis. I mean, the way the technology is changing, the way that the way we all do business and live our lives is changing every single day. And we haven't even, I mean, quantum computing, I mean, you know it, understand it, whatever. A lot of people think, oh, that's 5 years, 3 years in the future. Quantum computing is right now. It's already being used. It's already starting to be implemented, but they've really held back on it because it's so powerful that, like, there was one example I got, I can't remember who told me this, but there was an example done where half of the capacity, because like the way he set up the nodes in the quantum computer, like half of its power was able to literally hack all bank accounts I think it was in the United States, if I'm not mistaken, in a matter of seconds. And this was just an example that they did it, but that's how fast quantum computing is. So you add that to AI, what we currently know, and just so everybody knows, like in a matter of one day with my engineering team, we were able to build an AI version of myself. That AI version, you can literally, today, it took one day to build this. You can go in and have just a regular conversation with me, but it isn't me. The voice isn't perfect yet. We're working on kind of doing that, but it literally can pretty much articulate just about everything I can. And I haven't even loaded in all my videos, my books, or anything along that. We've literally created a bot well, we created an agent, I guess is what you'd know it to be called, to go out to the internet and search for everything relevant to Chris Naugle and what I do. One day it took to build that. So it takes one day to build that. What does that mean for everything else out there? And I think one of the things that I think is drastically being miscalculated is the speed, like you mentioned, of which this change is happening and can happen and will happen, and what that impact is going to have. So let's just start with the stock market, the general economy and the markets. I mean, you don't have to really be too smart or logical to understand we've been in a 16-year bull run, which is the longest in history by a long shot, largely created by stimulus and artificial reasons. That's why we're pretty much where we are. But kind of like back before the Great Depression, you saw a consolidation of their markets to a select number of stocks, a very small number of stocks. And that exact same thing has happened today. If you hear the term the Magnificent Seven, or the Magnificent 10, as some like to call it, there's 7 stocks that make up a massive percentage of the S&P 500. And those stocks, guess what they're involved in? Technology. So if that's where we're at today, what does that mean for the future? And is the stock market going to weather the storm, continue to push upward because of these 7 stocks and technology, or is there going to be a leveling or just a complete fall off? What do you think there?
Well, what I think is the people who will win, assuming that the audience listening to us is interested in, applicable outcomes or applicable things for themselves. Yeah, in my opinion, you have to ask yourself, okay, what do I want, for example, from the stock market? And I would say the vast majority of people want to make gains, winning basically by making an investment that really performs well. And when they sell their stocks, they make a good profit. So there are 2 things. You're right about the Mag 7 or Mag 10. But what I'm getting at and what I think people need to be willing to do is go 2, 3, 4 levels deeper than the information that you find in the mass media. Because when you look, and you can look in politics, or you can look in the media, or you can look at YouTube, and anything related to the stock market is fundamentally, at least in broad strokes, associated to the indexes. So is the Dow Jones or the S&P 500 or the NASDAQ going up or down right now? And to your point, the Mag 7 or Mag 10, what that really means is, and you use the market cap of these companies, right? So if you take the top 10 market cap companies in the S&P 500, they're probably in the area of 90% of the total value of the index, even though it has 500 stocks.
92% of the S&P 500.
All right, so I'm pretty close. That has to do with the way it is set up. But the other, and I believe more important thing is, you could say, okay, all I need to know is who are these 10 companies. And then I invest with them because they are the biggest, fastest growers. They're also gaining weight the fastest. In this case, it's a good thing, gaining weight. right? But there's one big but. Because of the technology, let's just assume we do quantum computing for a moment. We had somehow access to quantum computing. And one of the issues that we face is that there is a human genome, and that human genome has this nasty habit of mutating here and there at certain spots. And when it does that, it causes cancer, it causes rashes, it causes autism, it causes all kinds of different things. And when you go to the scientists today and say, okay, what would we need to be able to do so that that doesn't happen anymore? They wouldn't say, do this, do that, do whatever. They would say, you cannot avoid it from happening, but you can try to detect it. And then you get into your quantum computing and say, okay, and I give this example, and people can research it. At some point, most people probably remember the name Steve Jobs. Steve Jobs got pancreatic cancer. The first mutation of the genome in that pancreas area happened by the research that I read, and it's well documented, when he was 26 years old. Most likely 25, 26 years old. But it was undetectable with the technology available at the time. And the guy was even then one of the richer people in the world, and he became probably close to the richest people in the world. It took, by today's technology standards, 1 billion cells, a cluster of 1 billion cells, to be detectable. And we might think 1 billion sounds a lot, but that's basically like the tip of a needle or something like that. Like 1 billion cells before you can detect it. Now imagine the quantum computer could figure out, through the amount of calculations that took currently without a quantum computer would take 1,000 years to go through, what exactly the indicators are when it's only 100 cells. They are there. We can't detect it right now. And now take that to everything. And get back to the stock market question. Imagine there were a company that nobody knows their name of, but they keep publishing what they're researching. They keep publishing that they're now going to set up a clinical trial. And I have to apologize to the audience, but I've done a lot of consulting in the pharmaceutical industry, so I know the process very well. But that's what they would do. They set up a research, they set up a clinical trial, initially maybe with animals. Then they go from animal trials to human trials, and all of it is published. Most of the time, because these companies are VC funded, and then they go public so that the VC investors have a way to ultimately get their money back 10, 20, 30, 40. If you go this 1 or 2 or 3 levels deeper than just looking at the index and when did it go up by 20 points or did it go down by 20 points, but really pay attention of what is going on and where are the new members of those top 10. That's why I'm saying you can't just go with who is in the top 7 or top 10 right now.
Completely agree.
With that technology, that's kind of what people need to become aware of, like certain things, and we cannot pay attention to everything. So you really have to make, in my opinion, you have to make a decision. What are my core interests? I sometimes like to even call them, what are my passions? And when you identify what are your passions, then you can say, okay, I really want to master what's there to know about my passion. And, like in my case, I like computing and technology, and that's why I have shares in Tesla and Palantir. But I know that there are probably 6,999 other companies that I could have shares in, but they're not my passion. Now, if there's another company in that category between those two that does something that those two don't do and has the same potential and triggers the same kind of passionate response, I would probably add that. Right? And so that is also the answer, in my opinion. Instead of buying an ETF and getting somehow an average, really check out what you're passionate about. And part of the big reason is, and this makes no difference whether it's the stock market or real estate or gold or Bitcoin or whatever, is if you are passionate about it, you don't mind to spend 45 minutes, 60 minutes, 90 minutes on it every day. And when you're that well informed, every little change, every little nuance, the information is there. And if you don't want to dig it up yourself, use ChatGPT or Google. but you have to have the passion to constantly remain informed. And that, by the way, is also why investors and not traders, investors decide, like somebody like Warren Buffett decides when is the right time to get out of BYD. Right now, the media is reporting that Warren Buffett got out of BYD end of March this year. It took him from end of March, publicly posted, because he has such a big position, he has to publicly post it to the FTC, the SEC. But now the media finally caught up on it and made him again the genius. Well, now it looks like a genius because the stock has collapsed significantly, but it wasn't.
But it didn't when he started selling. It didn't.
Yeah, it didn't when he sold it, because he made 359% or something like that on the investment or more. It was an insane home run, executed when nobody had any clue about it. Why? They don't have that many things, but what they have, they really know their stuff about. And that, I think we need to learn the lesson. Figure out what is your passion, get into that passion, and you will find that there's no problem to spend a little bit of time on that passion every day.
I think that's brilliant how you just articulated that. And I'm going to bring that back to just a super simple thing that I think everybody on this podcast can articulate. If you really study investing and you study wealth specifically, you will find that there are laws to wealth. There always has been. They've never changed. And if you really want proof, go back to The Richest Man in Babylon, which is probably the best one to read to kind of see it. But most people that read The Richest Man in Babylon have a very hard time articulating what it's saying into modern day times. It'd be very similar to reading, Book of Revelations and trying to articulate, the scrolls and, just all the monsters and the demons and what they mean today. So what I did is I took that book, which I fully understood the 7 rules of gold. Okay. And I basically created the 6 laws of wealth, which are identical, just told in modern day times. And what you just articulated is the 3rd law of wealth, which is protect your wealth in the simplest form, which basically says one simple thing: invest in things that you know, like, and understand. It is that simple. However, in today's world, we live in a very strange time where people have just lost sight that there is a downside to the markets, and they just think that they can throw money at anything and they're just going to make. And rightfully so. I totally get it. You probably have a high probability of success if you just invested in the markets over the last 10 to 16 years. But the thing you have to get back to is exactly what you were saying, is you have to really focus on the things that you're passionate about, things you know, like, and understand. And if there's something you don't know, like, and understand, well, you got to have passion with it. You got to have belief in it. And then therefore you also have faith in that particular category or that particular company and what they do. And you had mentioned Tesla, Palantir, and many people listening have companies that they know, like, and understand. So that's what you invest in. But you got to get behind the scenes. You got to get deeper into those companies, what they're doing. And are you truly aligned with their culture, their mission, and what it is they are doing? And if you are, then you go all in, because then you have belief in it. You have faith in it. And there's so much power in that, because then when things do go sour, because listen, when the tide goes out, all things go out, right? It's how it works. So no matter what you invest in, but if you have faith in that, if you have belief in the company and you fully understand what they're doing, you're going to ride that out. But if you're just in an ETF or you're just in the S&P and it moves 20% to the downside, you're out. You're just out. Like fear steps in, all the human emotions, the psychology steps in, and you just bail, because you're not just attached to anything. It's just an investment. It has no meaning, it has no passion. Like there's nothing to the S&P or the Russell or the NASDAQ that really captures you, and just a human level. It's just, you're just investing in it, just try to make more money. But there's so much more to investing. And that's what you mentioned with Warren Buffett. Warren Buffett, has never just invested in the markets. Warren Buffett has gotten intimate with the companies he invests in.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Coca-Cola, there's probably nobody that knows more about Coca-Cola than Warren Buffett. And the same could be said for just about every company he's ever invested in. And because of that, he's been able to know, and he says it so simply. That's what I love about Warren is you invest in things that you know, like, and understand, but you buy low, you sell high, and you don't lose money. What you just explained is he bought low, he sold high, and he didn't lose money. But how did he do number one and number two? Well, he fully understood what he was invested in. And he looked at it every single day and studied the reports and studied the fundamentals, a lost art. Like just most advisors out there, I come from that Wall Street world. I will tell you, most advisors don't know a thing or two about fundamentals. They don't invest for fundamentals. It's a lost art. But if you and your money, you need to get intimate with fundamentals. It's one of the real reasons, like, I'm not saying I don't believe in Bitcoin, but Bitcoin has no intrinsic value. So I've always had a hard time being a long-term investor in Bitcoin. Now, technology and what Bitcoin does as a use case and what problem it solves, I love that and I can get into that. But again, there's just no intrinsic value. So I have just stayed away from it, which is fine. Have I lost out on gains? Absolutely. But am I okay with that? Yeah, because I don't know, like, and understand it. So I think that's just a key thing. And I know you love real estate because you have some fundamental beliefs in real estate. And it's a simple belief that everybody needs shelter. It's one of those human needs that we all must have. We must have shelter. Now, the question comes down to is when people lose their jobs, when the economy slows, will they have money to pay for the shelter? But then you also have philosophy around that. There's always somebody that's going to be paying for it because it's shelter. So do you want to talk just a little bit about the fundamentals of your investments that you do, including real estate?
Yeah, I would love to. One quick thing as a follow-up to what you just described is I think it is also equally or almost equally important, besides really having and discover the passion into certain things so that you actually really can focus on them, is to have for yourself in the different asset classes a definition of success. And I want to just make that a little bit more tangible. What I mean by that is I mentioned Palantir. I studied it. Everybody was kind of bitching and moaning about it after it went public on the stock exchange, and it opened up, I think, at 42 or something like that, and then it fell to 25, and then 20, and then 15, and the lowest I think it ever got was 7. And I looked at what is this company for, how long has it been around, and why did it even go on the stock market? And it was pretty obvious that to go to the next phase, they needed to get infusion of money. But what they were doing were basically the early stages of AI. And they're still doing this, and now they're doing advanced stages of AI. But that was, for me, the point to say, okay, this totally makes sense because it's a topic that I'm passionate about. I studied it. I want to get in, and ultimately not right at 6 or 7. I got in between 10 and 11. The point is when you define success to say, I want to get out of this not before 200, or like at Tesla, where my goal is not before 2000. Then right now, when it went from 10 or 11, when I bought it in 2021 to 180, and you said there's blood in the streets and the thing goes down 30% or 40%, I'm still up tenfold or 15-fold, even if it does that. So when you define success ambitiously, then in the case of the stock market, those fluctuations, I always say, and I know this is kind of like a throwaway type of argument, I say that only concerns the trader, not the investor. An investor, regardless what it is, if you're really an investor, you invest in something you believe in for a goal to achieve. And achieving that goal is the definition of your success. Now, if you do puny goals and say, I want to make 7 or 8%, you're constantly becoming a trader because you're constantly in and out, especially in the high-tech stocks, because they're volatile. But if you do an ambitious goal, like you buy something like I did and said, I think this thing can go to 200. I don't know how long it's going to take. The same thing to also answer the question about real estate. I studied real estate and came to the conclusion as an investor in cash flowing real estate, you have to basically make it through the first 10 years. Because to make it become really good is after 10 years, almost regardless of what happens in the market, in the economy, or whatever. Because 10 years of inflation with a steady pay in your mortgage, if you really go to the numbers, tells you that your cash flow will be able to cover pretty much almost any circumstance that can ever happen, even vacancy, for prolonged periods of time. Now, the other thing with real estate, in my opinion, that is completely off the radar, because everybody nowadays has been conditioned to look at any investment at how much did I pay and how much do I get when I sell. And you know this, I know this, but not enough people know that real estate, the aspect of appreciation, is really only one of many. That makes it really unique. So for me, the passionate part about real estate as an investment in real estate is, okay, I can get depreciation, I can get appreciation, I can get somebody else's money to pay down my mortgage, so I have leverage because I only really need to put 20 or 25% into it, and so forth. There's a number of different things. I can do the accelerated depreciation when the government is making the rules for certain periods of time very favorable, and then they turn it back, and then a new government comes and they make it favorable again. So you can play on that instrument if you want. But for me, when I analyzed it, is I want to have an investment or an asset that has more than one way to make money for me. And the only one that I found was real estate. But if you really look at all the different things that you ultimately get out of real estate, if I want $100,000 worth of stock, I have to basically put in $100,000. If I want to have $100,000 worth of real estate, I only put in $20,000, get the rest from the bank. The tenant pays the mortgage. I get 100% of the appreciation of the increase in value, and I can even write off part of this thing. Right? So that's unique, in my opinion. So that's why I'm into it. But the other part of your question, what do we do with tenants? For me, when you're really getting deeper into it, you have to ask yourself, what is the investment itself? What is the asset? And oftentimes people have asked me, you may have even asked me that, why would you want to have a series of single family homes as your investments? And part of the reason, or part of my answer, has always been because I believe if the American dream is true, even in the 21st century and in the 2025 and 2030 and 2040, is I want to have my own place with my own garden, my own garage, my own thing. And if I can't afford it to own myself, then at least the tiny, tiny bit below is renting it. So from the perspective of how does the massive market look like, and will I have tenants, I still believe if certain tenants in the age of abundance or age of I lose their job and can't afford the rent anymore, there will be others with different jobs and different occupations who still see that as a goal. I would not make the same argument about any size of apartment complex. Now, I don't want to poo-poo apartments, but for me, an apartment is an apartment is an apartment is an apartment. Right? And yes, you can have bigger and smaller, but it's not the same thing like your own house with a garden, with a garage, and so forth. Right? So that's, I'm trying to be with our investors in the thing that everybody, if they're really going after the American dream, ultimately wants.
You said so much there. And I literally, the first thing I'm thinking is just, why isn't there more people like you that do this level of due diligence, that come at it from this level of understanding? There's just not many of you. There's a lot of people out there just throwing things around, but not at the fundamental level that you are. You said some things there that I just got to unpack, and then I'm going to go back to the investing thing about how you were talking about, the different ways to make money. Real estate is so unique. It can be a real pain in the ass, but it is so unique for that one reason you said. I've been investing in real estate since 2006, done all different kinds of real estate. I've hated most of it just because it's just a lot of work. And I realized that, I didn't want, I was an operator. And in being an operator, I just wasn't in my core competency. It wasn't the place I wanted to be. So I moved away from being an operator. And, when we had real estate, we did flips, we had lots of rentals. And I want to come back to your single family philosophy. We're in a very interesting dynamic shift of the way people view goals and things. I mean, when I grew up and when my parents grew up, it was get a home, pay it off. That was an American dream, right? And it has been for, gosh, I don't know, probably pretty close to forever, as far back as I can think. But now the American dream is very different. It isn't so much have a house, pay it off, the white picket fence and all that. But I can certainly tell you what the American dream is not, even with millennials, Gen Z. It is not living in an apartment. That is So I loved how you said that. No matter what, fundamentally, there's nobody I know that sits there and says, oh my God, one of my biggest dreams is to live in an apartment building. Period. And I can prove that. So I've owned lots of apartment buildings and I've had lots of tenants. And the tenants in apartment buildings are transients. They come, they go, they come, they go, they leave mess, they go. But then I've also had lots of single family rentals, to which I still do today. And the one thing I'll say about the single family rentals that I have is the same tenant that was in those houses in 2014 is still in those houses.
Yeah.
They don't just treat it like an apartment, it's their home. You mentioned gardens. They take pride in their landscaping. They take pride. I have this one house. They've been renting it since 2014. They pay $32.50. It's a beautiful house, beautiful backyard, brook that runs through it, gardens. And we were over there one day, me and my wife, just walking around. And we noticed that the front steps. Now, his wife had some health concerns, and we were well aware because they fell behind in rent, but they always made good on it. And we noticed that the one back deck was starting to kind of look decrepit, like something you could tell it was just falling apart. So I sent him a message saying, hey, listen, I'd love to get together with you. I'd love to, just discuss like some of the maintenance issues on the house, blah, 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 namely the deck. And it was interesting. I did not expect the response. I was doing it sheer out of just, I want to help. I want this to be your home for you and your kids. I want it to be safe. It was coming from no other place. And his response back was, just one of, I'm so sorry that, that the deck isn't there. We've done this, but when she got sick, we just fell behind, and we just haven't got it. But I promise you, I'm going to be redoing that whole deck. We're back on our feet. We're just getting going. You don't have to do anything. We don't want anything from you. So that just these people do not own this home. They may never own the house, but it is their home. They take pride in their home. They've raised their kids in their home. They have gone through hard times in their home. It isn't their home, but it's their home. Hopefully that fundamentally makes sense to some of you. You will never find, well, I shouldn't say never, but you will rarely ever find that of someone who lives in an apartment complex. Something breaks, they're on the phone with the tenant or the property manager saying, hey, the light bulb's out. Can someone come over and fix it? Hey, the light fixture broke. Can someone fix it? Hey, this, that, the other thing. These people, since 2014, and just so you all know, we're recording this in 2025, they've never called me once. Never once. Not one time. So I love that because I think no matter what happens, people always want a home. Whether or not they own it or not, they want a place that is theirs, that they tend to and take care of and call it their own. And I want to go one step back to investing. I have zero money, well, outside of a quantum computing stock, which I'm not going to give you because I'm not giving investment advice or anything along those lines. Got to be very careful with that. So this is not investment advice. I'm just telling you what I do. Being a financial advisor, one of the things I learned is I learned bonds. I understood bonds. It was a huge part of the Series 7. You understand the inverse relationship to bonds, interest rates, yield, and price, and all these things that just would bore the average human being. Because I know it so well, I understand some fundamentals. In the past couple of years, I've watched the economic cycles. I've watched the Fed. I've watched what they've done, printed a whole bunch of money, dropped rates to levels that were just kind of silly, and people actually thought they were going to last, but then raised rates to a, not a hyper level, but a very high level to combat inflation. And now we're on the other side of that and rates are going down. But the one thing, if you understand bonds, you understand the price movement of a long-term bond. So we'll talk about a 30-year U.S. Treasury bond. Effectively, you're lending money to the United States government. The United States government's paying you interest called yield on your money. And then over a period of time, like if you kept it there for 30 years, the government would give you all your money back. But the price moves during that 30 years. It goes up, down, goes off of par, and just moves all over the place based on primarily different factors, but we'll just call it interest rates to keep it simple. So here's how it works. Think of an X. When interest rates went up to combat inflation, the price of bonds went down. So rates up, price of bonds go down. Warren Buffett, let's go back to him. Simple philosophy, buy low. To what you said, you bought low with Palantir. So when it went down, it didn't matter because you bought it so low. So I started buying long-term treasuries 20 plus year US Treasury bonds on this way down. And I just dollar cost averaged in. It kept doing it. And it kept going lower and lower and lower, which means I kept losing more and more and more and more to the extent in bonds. And most people would say this is crazy. Like I was down 28%, as I was buying on this way down. Now, outside of, when I did some tax harvesting in 2023 just to kind of do it. So I sold and then I bought back in the 90 days, but forget about that. So now here we are. I've been buying these treasury bonds forever. I have a large position in 20 plus year treasury bonds. And now the Fed is on the other side, right? Now we have made that first tick down. They're calling maybe two more. And if you look at what's been happening in the long-term treasury bond, it's exactly what should happen. There's been some weird stuff that's happened in between, but that's not for here nor there. But now the price of those bonds are moving up. And in anticipation of the next move and the next move, if the economy keeps weakening, we know the Fed will always play the same game. They'll keep dropping rates, which means the price goes up and up and up. But what you said was so powerful because when I got into this, when I started buying treasury bonds, I just determined that the rest of the market was fundamentally not stable for what I wanted to invest. It didn't fit things that I know, liked, and understood. And I just didn't want to play the game, didn't want to take the risk. The juice was not worth the squeeze. But the treasury bonds, I got paid an interest rate for having my money there. And I knew the game I was playing extremely well. But now when it's moving back up, here's the thing. I know exactly when I'm going to sell. And I can almost predict based on movements that we've just seen with the 25 bip drop and some of the things that have happened, I can almost tell you exactly when it will get there if the Fed followed a certain pattern. So based on that, that's the speculative part is I don't know what the Fed's going to do and when they're going to do it, but you can usually get a pretty good gauge of the direction we're going. But see, I bought based on very fundamental reasons. And I bought down to a certain level. So I dollar cost averaged down into this one to a very low level. And when it goes back up, I know exactly where I'm going to sell. Investors don't do this today. Warren Buffett certainly does. They know what they want to buy at or where they want to get to with buying with dollar cost averaging, and they always know where they're going to sell. And then they don't, when a stock gets to a certain price, they don't be like, hey, I think it's going to go higher. Let's hang in there. And then it gets to that next higher price. Oh, I think it's going to go higher. And then they hang in. They have very clear objectives for their investments. And therefore, they have very predictable results with their investments because you get rid of human emotion. It's just a fundamental set of rules that you invest on. And if everybody else invested, I don't care if it's real estate or crypto or stocks, bonds, mutual funds, anything. If you set some clear goals for yourself, some clear investment rules, and you followed those, you would have much better track history in your investment. You would lose a lot less money and make a lot more money, and you would do it with a lot less risk. But yet we don't. People just throw money into mutual funds that they don't even know what they're investing in. They don't even know the first stock that's in the mutual fund, XYZ, large cap growth. Oh, sounds good. My advisor said growth. I'm in growth. Yeah, you don't even know what you're investing in. The ETFs you invest in, you have no clue what you're investing in. And you have no set plan where you're going to buy or where you're going to exit. None at all. And even when it hits there, you probably wouldn't sell because you'd be too greedy and you'd just ride the darn thing out to the next level and the next level until the whole bottom falls out, it goes down. And you're like, oh my God. And then you'd panic and you'd sell and you'd more than likely lose money.
I agree with you. Although, I mean, one thing I want to say is when people say, okay, so how do you set the target sales number? What I recommend is to try to combine certain things where time plays a role. So I give you one example. I have a certain number of properties that I have for myself decided I want to have debt free at a certain point in time. And it happens either because the tenants pay those mortgages, or it happens because those stocks reach their goal. So it's not just to say, okay, Palantir reaches 200, now I want to have the cash and I don't know what to do with it. No, when I get those $200 for the $10 share that I actually purchase, that money is going to make my whole real estate portfolio debt-free.
Self-complete.
Which then translate as today, $15,000 a month in income.
What kind of a return on investment would that be?
I have never calculated that.
Probably pretty
I
close
mean,
to
I know
infinite.
that on Palantir, it would obviously be basically 20x on that original
No,
$10.
but the real estate, if you use the gains from Palantir, you paid off your mortgages on your rentals, and then your rentals just produced you $15,000.
Oh, yeah. I don't know. I would say close to infinite.
Yeah,
Or
exactly. It's an
something.
infinite return almost. I mean, minus taxes and utilities and things like that. But for the most part, it doesn't even matter because it's still infinite. You use gains from one to offset and pay down the other, and now it's just a steady cash flow.
Right, but that gives the goal a purpose. Right, that is one of the things that I like to, when people say, well, how do you come up with the goal, is what's the purpose of the goal? If in my case, the purpose is I want to ideally have either, if I have to wait for the tenants to pay it off, it will be a longer term goal. But if I have conviction in those passion investments, then it's probably going to happen sooner. I mean, if I look at it right now, it might be next year. Right? I mean, if they keep growing as they have, they're at 180, so 200 is not that far away anymore.
Not at all.
And I might be able to pay everything off. Okay, and so then the tenants don't pay the mortgage; they just pay me. Right. So that's something to consider. Not just arbitrarily pick a number, but associate a purpose with it. And I would say if you take all those things that you and I have discussed today, if people were to do this and change their habits in that direction, it would make a pretty likely successful investment career.
But it all came back to one thing. We started and we're going to finish on the same thing, purpose.
Right.
I mean, in life, that is the goal. You know, money, and we talked about this when you had me on yours, money has a diminishing return. The more you have, the less valuable it is to you until you find purpose. And, like you can find billionaires that are absolutely miserable because they just lost purpose. Their purpose was more and more money, but they didn't understand that money was just a tool to serve a purpose, and they just lost that purpose. The purpose faded away because one reason or the other. They exited their company. It doesn't matter. Purpose is everything. We do things in life and we endure tremendous amounts of suffering, which is okay because of a purpose. But if you didn't have that purpose, you would never endure the suffering. I mean, you can look at example after example. I mean, people literally that lose purpose in life, they don't last long. They don't live very long. And there's all sorts of strange stories of how people just die because they literally have no purpose in life. But then you hear about people that have purpose. Maybe it's a child, maybe, a big purpose in life. Someone has a sick relative, a sick person that they love. Now, they themselves could be sick, but it's almost proven scientifically that if somebody was sick, but yet they were caring for someone that they cared about so deeply, that purpose would keep them alive, even though if they didn't have that purpose, they probably would die from their sickness. But because they're caring for somebody, a sick child, whatever, an elderly parent, a husband or wife that's in worse condition, they endure tremendous amounts of suffering. They endure tremendous amounts of pain, and they endure they make it through what most doctors would say is the impossible because of purpose. So what you started with and what you just finished with is purpose when it comes to investing. And Ideal Wealth Grower, I have to believe that that's a lot of your philosophy. So can we just spend just a couple minutes talking a little bit about your company, how people can learn more about it? I mean, I'm incredibly interested. And I'm not interested because it's real estate. I'm interested because of you, because I'm absolutely fascinated with your philosophy around this, because you hit on some beyond fundamental things. You hit on some faith-based things, some beliefs that I have, and just things that touch deeper than any fundamentals will ever hit. But what is Ideal Wealth Grower? How do people learn about it? And what is it that you guys actually do?
Yeah, so finding out about it is by going to idealwealthgrower.com. You can just go on the website. If you get to the homepage at the top right-hand corner, there's a little button called Discovery Call. If you're intrigued and you want to have a conversation, you can book a call, and I have typically a 1-hour conversation with anybody who wants it. Mainly to find out, are we kind of like on the same wavelengths? Are we resonating? What Ideal Wealth Grower is doing is basically two things. Number one is setting up an LLC for you so that you can do investing professionally, not as a financial advisor, but in a professional manner. And what comes with that, when you say from a philosophy point of view, is if we take your example, I want you to be King Chris. And King Chris has people that serve him. Those people are called bank, insurance company, property management, inspector, appraiser, and you can keep adding to the list. Those are your employees. And for you, I know, Chris, you've been doing this for a long time. It doesn't quite apply because you already have kind of like inhaled that and it's part of your nature. But for a lot of our clients, it's not. They're doing a job somewhere, they have ambitions, but they basically live in this mindset of the world is happening to me, not I'm directing what is supposed to happen. So the mindset shift is to say, not just do you have a business, but you are the king of this business, and you have to learn that these people work for you. And when we do the investments far away from where our clients live, and property management employee doesn't do their job, guess what? The same like what happens if you don't do their job well, you get let go, and we find somebody who can. Right, but it's a mindset thing. And then obviously the other part is helping to identify what is a good investment, how does a good property look like. And instead of just randomly going on Zillow, I have over 15 years developed close relationships with organizations who provide properties to my criteria to me, and I just basically make them available to our clients. So the selection and actual purchasing process is obviously part of the program. But I believe the more important thing is you have to basically change who you are when you really want to become an investor. And that structure is not just there because it is a good structure, but it's also protecting you. It's separating private from business. It gives you legal protection. It gives you anonymity and those kind of things. And by the way, it also gives you a different standing. If you as a business owner have a conversation with a bank and they think you're an employee and they treat you like an employee, and you say, are you talking to every CEO like this? One simple question, 4 words. And they will be pausing and then say, let me say this in a different way. Almost 99% guaranteed is the answer. And then we have a completely different conversation. You just have to remind them that you're not the employee who makes a certain amount of money and can be pushed around like they do typically. So those are some of the things, just a few examples that are part of the mentoring program. It's not just I can show you properties that are worth investing in. I want to get you to adopt a mindset that makes you successful in the age of abundance.
So then after that mentoring, which is vital because it is a fundamental shift in the way the majority of people think. I loved how you said that. A lot of people just think that things are happening to them when they're directing their life. You are always directing your life based on your faith, your beliefs, and everything else. Like, you are in full control of it. You just have to accept that. And you have to be the CEO. I just love the way you're saying this. Then you help them find properties, or do they invest alongside of you?
Yeah, I mean, I work with a whole bunch of turnkey providers. And the good thing with the turnkey provider is they find the property, they either build it or renovate it, then they put it on the market, send it to me, and they also manage it. And so I have literally a little community of turnkey providers who constantly send me properties. And I go through an evaluation process with the client to say, okay, where would you like to invest? What are you looking for? Is the emphasis, and most of the time the emphasis is on cash flow. And then we're looking at what's available, what do you like, what can you afford, and then we pick the property and go through the normal process, like make an offer, sign a contract, do the inspection, all that good stuff. But the approach basically is parallel, right? I want to help you build the right attitude, and I want to also help you build the portfolio. And
I think
at
one
the
or the
end,
other.
and what happens at the end? The program is 12 months. People have anywhere between 1 and 4 properties at the end of that. And so they've gone through the process a few times, most of the time, or are about to go through it at least the second time. And so there's a little bit of a familiarity, and it goes to what I call kind of maintenance. Everybody that has ever joined our program is still, in a sense, a member of the tribe. And if they have a question or they want to contemplate the next investment or so forth, they just get in touch. And for me, I see this more as a service. Yes, I get paid for it, but the main point is I really see this as a service to those who are interested to get to that point as a human being. And if they went through the program and they paid for the program and they started the journey, then I'm more or less just there in case somebody has a question. Yeah.
Well, the other thing too that we haven't talked about that to me is something so valuable, you hit on it, but we didn't directly hit it. And that was the different ways you can make money. Most people, when they think of real estate, they think I want cash flow, which is what you do. Turnkey properties, they're rented. You got property management. You got this team, all these people that work for the people that, are part of your tribe. But the other thing too, is now that I understand what you're doing, there's a massive opportunity for all of these folks to make a tremendous return. And that is it's basically the cost segregation studies. I mean, they own the properties. They could go get a cost seg on the property with the new tax bill that just went through. Now bonus depreciation is back up to 100%. If you guys haven't looked at cost segregation studies, and a lot of people just discount cost segs because they're like, oh, it's just a single family house. Well, yeah. And in today's world, single family houses aren't all that inexpensive. And most cost segregation studies still make sense even if a single family house. I've done many of them. But when you do the cost seg, you're going to get a tax deduction based on lots of different factors. I'm not the expert. I just hire a company that I've got a good relationship for that. But you see, when you buy a property, it's not just the cash flow you're getting. You could get this hidden return in the form of in some cases, a very large tax deduction. Like this office building here, I'm going through a cost seg right now. We just refinanced this building. So we bought it a little over a year ago, and we did a creative deal where, they held paper. I took over a land contract and I put cash in. We just refinanced it, but now we're doing a cost seg, and the building's worth about, call it $1 million for simple math. The cost seg, the numbers that came in pre the new tax bonus depreciation were in the $85,000 range. So do the math. If you could just make $85,000 on an investment of $1 million, what's the return? But remember, I don't have $1 million into this. I have probably about $120,000 of my money into this building. So what is the return of $85,000 on a $120,000 investment? I think all of you are smart enough to know that that's a really big return, right? That's just the cost.
I mean, when the people listen, not everybody is like their main income comes from business. A lot of people, at least that we're working with, have pretty substantial regular W-2 income, right?
And so they have no way to really get write-offs with W-2 income.
Yeah, exactly. And sometimes, if you're happy and lucky enough to work for the right company that gives you a substantial bonus, that gets typically the highest tax rate applied to your bonus.
For sure.
Right. So if you have that situation, I recently had a client who got a huge bonus from his Amazon job, like something in the $200,000 area for 1 year, plus his normal salary. So for him, we actually found him a build-to-rent property, brand new building. Cost seg was much easier than normal because the builder obviously has every little detail down to the last screw that they put into this. And he could write off something like 120 or so because, with the new rules, you can basically take all the shorter term stuff right away. It depends a little bit on the circumstances. But my point is, and I mentioned this earlier, and I think we have to kind of come to the conclusion here a little bit, not to confuse the listeners too much. But real estate has this interesting thing. It has cost seg, it has inspections, it has cash flow, it has appreciation, and all these kind of aspects. It's not just you buy something and you hope it increases in value. And that's, I think, what makes it really unique, and anybody can do it, basically. And that's why I got really passionate about it, and to the extent that I'm saying I want to help other people see the light as well.
Right. I love this. I really do. This has been phenomenal. Folks, if you're listening to this, you just took so much out of this. I think a lot of folks don't even realize what just transpired over the last almost hour that we've been doing this podcast. But go back and re-listen to this. Throw a like if you like it, but most importantly, go to idealwealthgrower.com and get on the phone. Just talk to him. Clearly, you can tell just his nature. Just you can sometimes just know he's not going to sit there and try to sell you something, pitch you something. He's there to solve your problem. We all have problems, money problems. Every one of us, no matter how much money you have, you still have a money problem. The more you make, the more taxes you pay. So that what he does can fix that too. So get on a call with him. Learn that. And I can tell you this, we're going to have him on more of our shows. We're going to bring him on the webinar. So if you're ever on Wealth Webinar, I'm going to ask him to come on that and talk about this, because it is really just phenomenal the way he's doing this and the way he looks at all of this. And I have probably can count on one pinky finger the number of people that I have found that have this level of understanding of investing with that purpose-driven investment philosophy. And it is just so rare, but yet so just amazing that I had you on this podcast, to talk to my audience. So I do thank you very much. Idealwealthgrower.com. We'll put it right up in the description. Anything you'd like to say in closing?
Only that I'm glad that we found each other.
Me too. Me too. And when I was on your podcast, I got to talk about me, but I kind of wish we did this in the reverse order where I got to do your podcast first, because like, I'm just very excited that we made this introduction and we got to know each other, because I've got big plans. So more on this later, but let's wrap this podcast, folks. Thank you so very much for joining us for this episode of the Money School podcast. I hope you enjoyed it. And if you did, tell a friend about it, get them to come on and subscribe and pay attention, because we're taking you where you need to be. All you need to do is just pick up the breadcrumbs and take control of your money. With that being said, folks, we'll see you on the next episode. Till then, have a good day.